Primetime. I'm Tamanna Inamdar.
And my name is Aayush. Let's take a look at the headlines.
Vijay Mallya gets bail after being arrested for the second time this year. The fugitive tycoon faces new money laundering charges related to Force India Formula One team.
Petrol and diesel are going to cost you less from tomorrow. The government reduces the basic excise duty rate on petrol and diesel by 2 rupees per litre.
Reliance Communications touches a record low after the deal with Aircel falls through. Bankers tell BloombergQuint they're not keen to take the Anil Ambani Group company into insolvency.
The Reserve Bank of India is expected to keep rates unchanged tomorrow as inflation moves towards its medium-term target. That's according to a Bloomberg survey. Automakers stick to the fast lane in September. M&M, Ashok Leyland and TVS Motor report healthy monthly sales growth last month.
It's a strong start to October. Indian markets rise for the third day in a row. Tata Motors leads the rally.
And we've got some big market voices coming up on Prime Time. Rhythm Desai and Saurabh Mukherjee talk about the multi-trillion-dollar opportunity in Indian equities and the urgent need to fix the banking system.
Security forces foil an attempt by Jaish-e-Mohammed to storm a BSF camp near the Srinagar airport. All 3 militants and 1 Jawan killed in the army operations. The big story this evening. Vijay Mallya was arrested today for the second time in 5 months. The embattled liquor baron was arrested in London in a money laundering case filed by the Enforcement Directorate. Mallya, however, was granted bail soon after his hearing. Mallya was first arrested by British authorities in April this year and was released on bail at that time as well. He fled India last year and is wanted in the country for repayment of loans to the tune of 9,000 crore rupees.
Petrol and diesel are set to get cheaper starting tomorrow. Faced with growing resentment against high fuel prices, the government said it will cut the basic excise duty rate on petrol and diesel by 2 rupees per litre. The Finance Ministry tweeted that the decision was being taken to cushion the impact of rising international prices of crude oil as well as to protect the interests of the common man. The ministry added that the revenue loss on account of the duty cut is about 26,000 crore rupees in a full year and about 13,000 crore rupees during the remaining part of the current financial year.
Now, lenders to Reliance Communications are in a fix. The company's deal with Aircel has been called off. That deal was the cornerstone of a plan to invoke strategic debt restructuring in the account. So what now? There are 2 options. Go through with the SDR plan or invoke insolvency. Vishwanath Nair joins us on the show to take us through these options before the lenders.
Even after a string of bad news coming in from Reliance Communications over the weekend, the lenders are now thinking of not invoking insolvency in the account. Primarily, the reason behind not invoking insolvency is the high cost involved. If you know what the RBI has said in the past, that if you invoke insolvency and bankruptcy code in a certain account, you will have to provide 50% of the secured and 100% of the unsecured exposure you have to the case. In the RCOM case, the domestic lenders have about 18,000 crore worth of exposure, and they will be forced to provide roughly half of that, and that's a lot for the banks to handle at this point in time. Instead, what the lenders want, however, want RCOM to do is to complete the Brookfield deal, something that it had announced in December 2016. At that point in time, Brookfield had said that they will pay 11,000 crore for about 51% of the tower assets of RCOM. Now, that deal is likely to be revised, is what our sources are telling us, and something that the company's management has also come out and said. The reason primarily being the Aircel-RCOM merger, which was the backbone of the whole resolution plan, has fallen through. That is the news that came on Sunday. Because of that, the tower deal has also been revised because Aircel's tenancies were part of the original deal, and since Aircel has pulled out, now those tenancies don't exist, and therefore the valuation of the deal is likely to be revised lower. Now, because of that, what is going to happen is that RCOM is not going to get the amount of money that it had originally planned for. Lenders on their part had invoked SDR in June June of this year. At that point in time, they had said that the completion of the Aircel merger as well as the sale of the tower assets will be key to the success of the SDR. Now, since that is one of those things is not happening, they will be forced to convert their debt into equity, representing about 51% stake in Arcom as part of the SDR scheme. And then if the deals are not completed, whatever pending deals are there, if they're not completed by December, the bankers will be in charge of completing that deal. And that is going to be a problem for the bankers, which they want to avoid at all cost. Now, what is also important to notice is the total debt amount. So, see, this is the reason why the bankers are worried. It's a 45,734 crore account. It's a large account, right? This, of course, involves the international lenders, but still, it's a significant amount to go through the insolvency process. There are already multiple large accounts in the insolvency program, which bankers are battling at this point in time. They're trying to figure out resolution strategies. Another 45,000 crore account will create a huge problem. In Arcom's case, you have to also look at what the valuation of the asset is about. Tower is valued about 11,000 crore. At this point in time, this is likely to be revised. The spectrum is likely to be 19,000 odd crore, and the real estate at about 10,000 crore. Now, this is all part of Arcom's turnaround strategy. By selling these things, it is likely to gain enough money which they can pay off the bankers, deleverage their book, and therefore bring down the debt to a more sustainable level, thereby resulting in some sort of a turnaround for the company.
Now, all eyes will be on RBI tomorrow, and of course we're going to be tracking that story later on. But meanwhile, Vijay Mallya was arrested today for the second time in 5 months. Like we told you, the embattled liquor baron was arrested in London in a money laundering case and was now then left on bail. The Enforcement Directorate is the one pushing this case, and he was arrested by British authorities in April, but was later released on bail. So let's go across now and speak to Satish Manishinde is joining us on the phone line. And before that, to find out what the arrest means, we're joined by two legal minds. Hiten Vengaonkar, who is the lawyer of the Enforcement Directorate, is also on the phone line. And of course, we have Satish Manishinde as well. Welcome to both of you. Hiten, if I can ask you first, what is the case right now in courts on the basis of which Vijay Mallya is arrested? What are the charges that on the basis of which he's been arrested?
See, the case which has gone to UK court is only in respect of his extradition proceedings. The actual case of money laundering, which he is likely to face only in India before the Indian courts. So right now what UK court is going to decide is whether the offense of money laundering, there is sufficient material available, and on that basis whether it is required that he should be extradited to India to face the criminal charges against him under money laundering.
Right. Mr. Vengaonkar, as a follow-up question, I wanted to ask you, is it, from what we gather, this is more procedural than anything. So what really warranted the second arrest? Is it because of the additional affidavit that was actually, filed in this case?
No, see, the first arrest which was effected in April was on the basis of the request which was forwarded by CBI. There was a non-bailable warrant issued by the Indian courts in CBI case, and the request which was made for extradition was by the CBI. Now, presently, today's arrest is in pursuance to the request made by PMLA court, that is the money laundering court in Mumbai, where the non-bailable warrant was issued, and subsequently the request was also issued. So that's the reason why I have been continuously saying that it was just a formality and the procedural part which was completed. There is nothing to get excited about.
All right, I have Tony Aarons from Bloomberg joining us live from London with more updates. Tony, what are you learning about what happened in court today? Because this is the second time in a span of a few months. It happened in April last when Vijay Mallya was arrested and then released on bail shortly. So is this just a procedure being followed out?
Well, these charges weren't a surprise. There was a hearing in July in the earlier case where the lawyers for Mr. Mallya said that he was facing new charges. So it doesn't seem that this was a surprise to his attorneys or to him. And to expand the case, you have to arrest him, and he has to go back to the magistrate's court to have those charges added to the case. Now what happens next is there's going to be the full extradition hearing in November.
Right, Tony. Also, thanks so much for speaking with us on BloombergQuint. But as Tamanna was saying, was this just procedural? And also, what I want to ask you was, in terms of how bail is secured in cases like this, was this absolutely routine?
Well, in terms of the bail, he was already on bail. He was already on bail. He was checking into a police station on a regular basis. So this didn't really change. It added some new charges to the case, which have been contemplated in India for at least a few months, it seems. And it didn't really change his situation at all. Everything's going to go back to court in November, where they're going to have a full extradition hearing on whether on the nature of the charges, the nature of his defenses, and whether this is something he should be sent back to India for.
All right, thank you so much for that, Tony. Let's get to Satish Manishinde, who's also joining us on this conversation. Now, it was procedural, as Tony Aarons from Bloomberg was also telling us. What really does it mean for the larger picture? Because at the end of the day, the government of India is hoping to extradite Vijay Mallya.
Well, first of all, it has to be decided whether it's an extraditable offense. Secondly, there was no need to arrest him again because he's already on bail. He's signed a bail bond, and there's only to, hype up the issue, politically or otherwise, that the government of India is doing something to bring back money which are away from India. But there are larger, defaulters than Mallya. I don't see why no action is being taken against them.
I just want to take that point across to Hiten, who's also with us, and he's the lawyer for the Enforcement Directorate, joining us on the phone line from Mumbai. The point here is that what is all of these arrests and then bail actually doing for the case, Hiten? Because this is on the basis of the Enforcement Directorate affidavit, which was filed a few months ago. Is there really enough meat in your charges to make it a criminal offence in London as well? Because it's a dual criminality which is required for extradition from the UK.
Right. The really question which has been posed by Manishinde sir is absolutely valid. That in order to extradite a person from a particular country, then there has to be an offence in that country as well. Now, therefore, what we have to really understand is that the money laundering offense, which is the outcome of a convention treaty which has been executed between various countries, and UK has also been part to that convention treaty. And on that basis, we do have that treaty. And on that basis, money laundering is also an offense which is recognized in the United Kingdom. And because it has been recognized there, it becomes an extraditable offense. How grave it is and how serious it is and what material, whether it is insufficient material or it is insufficient material, will be decided by the UK court. But as far as the offense is concerned, definitely it is an extraditable offense, because it makes an offense even in UK, and therefore there is dual criminality which is existing. So I really don't see any hurdle to getting through the issue which Manishinde sir has really raised, that whether it is an extraditable offense. Now, as far as sufficiency of material is concerned, let me tell you that the material and the evidence which has been collected by the Enforcement Directorate during their investigation against Vijay Mallya has clearly pointed out that the money, that the amount which he has taken from IDBI Bank, he has laundered that amount and he has taken it outside the jurisdiction of our country, which amounts to an offense under money laundering under Section 3. So really, there is sufficient material to extradite Mr. Vijay Mallya.
Right, Mr. Venugakar, and now that, since you and Mr. Manishinde did mention, the whole process when it comes to dual criminality and established, what the particular circumstances of this case are, just to clarify, because there's been a lot of talk about today's arrest. This, Mr. Venugakar, has nothing to do with, it is entirely to do with the IDBI loan default case, or is there something to do also with him actually siphoning off that money and channeling it to his Force India Formula One team?
Primarily, it is IDBI case which has been investigated. And while investigating, if at all there is any material which we really can lay hand on, which leads to this Formula One race in which the money was invested, or rather it was used, definitely it becomes a part of the same investigation under IDBI. We have also taken that ground while getting his non-bailable warrant issued, that the money, a part of the money has been used for Formula One race, which was not the purpose for which the Indian money or the Indian banks had lent him loan.
Okay. I just want to take that point to Mr. Manishinde because Bloomberg is also reporting that the new charges are on destination of funds. And is that really the missing link to actually prove that if Vijay Mallya did divert money which was granted as loans to run his business by banks to other places, then where did that money go? Is that the key now, and do you think that is in place? That part of the investigation seems to be in place.
Well, if the investigating agencies who are aware of the banking transactions, which have happened from 2004 to 2005, if they're not in a position to unearth any material till 2013, when actually Mallya was before the CBI, it means that there's nothing in this case. I don't see on what grounds the banks and the money laundering authorities and the CBI are, harping upon the story of money laundering. Could they not detect this all along when the money was going from one bank to another? Did they not ask Mallya to submit any accounts? Did they not ask the banks on which these monies are going as to where it was going? Obviously, all these accounts have been audited. All these materials have been placed before the ROC. So I don't see any reason how they'll find any material against Mallya.
Mr. Manishinde, some would argue that in this case, if the entire prosecution and the evidence collected so far, and the basic case is weak against Vijay Mallya, some would argue that why doesn't he come and face the law of the land in India?
Well, in fact, when Mr. Sharad Pawar had requested the bank chairman to come and resolve this issue as far as Mallya was concerned, because by then Mallya had approached various banks to tender 6,900 crores towards the loan, which is the principal amount. They refused to accept the settlement. Banks have accepted less than 50% amount of the principal amount towards settlement in other cases. I don't see any reason why this was not done. There's obviously something more to meet the eyes than what is before us.
Well, Mr. Hiten, if there's more to meet the eye, and on that point of that there are other defaulters, is Mr. Mallya being made sort of a poster boy for how this government is saying that it is, bringing him to justice?
See, as a lawyer, it is very difficult for me to make any political statement on this part. But as far as a lawyer for Enforcement Directorate and the person who has really gone through the entire complaint or charge sheet which has been filed against him, I can definitely tell you that it is nothing but a case of money laundering, where the Indian money has been taken for one purpose by defrauding the banks and has been utilized for his own personal purpose. That is the simple case which is there against him. And the money has been traveled outside the country, shows that he has laundered it and has used it for his personal needs. So that's the only thing. Political statements I really don't want to make, whether he is a poster boy, whether he is just scapegoat.
Okay.
Fair enough, Mr. Venagaonkar. Mr. Manishinde, another thing I wanted to ask you was the last time that he was arrested, you actually spoke to us at BloombergQuint and told us that the extradition proceedings are likely to take place in England and would not meet the requirements of strict procedure in the UK, as Mallya has several defences to prove that similar alleged offences are not punishable in the UK. When it comes to developments of today, do you still think he's a victim of circumstance, the way you mentioned the last time around? Right, Mr. Manishinde, can you hear me?
Maybe I'll have to leave now. I am slated for another meeting. Can I leave? Thank you.
Yeah.
Fair enough, Mr. Manishinde. Can you hear me for one quick last question? Okay, I think we've lost Mr. Manishinde there. But is Mr. Venagaonkar, if he's still on the line, Tamanna, it's interesting, right? Because that's exactly what Mr. Manishinde told us the last time he was arrested, saying that it will not hold good in UK's procedural law.
Well, we'll have to wait and see what happens in that UK court. But here's Vijay Mallya responding to today's arrest. Let's listen to that.
Many allegations that are extraordinary, but you will hear it in court, no doubt, answering the court. And I do not have to repeat to media.
How did it feel, though, to be sitting there alone once again, looking a little forlorn, and being asked if you consent to being extradited? A little absurd, no?
Your interpretation on how I look.
Petrol and diesel are set to get cheaper starting tomorrow. Faced with growing resentment against high fuel prices, the government said it will cut the basic excise duty rate on petrol and diesel by 2 rupees per litre. Now, the Finance Ministry tweeted out that the decision was being taken to cushion the impact of rising international prices of crude oil, as well as to protect the interests of the common man. The ministry added that the revenue loss on account of the duty cut is about 26,000 crore rupees in a full year and about 13,000 crore rupees during the remaining part of the current financial year.
Let's go across to Soumyakant Ghosh, Chief Economic Advisor of the Economic Research Department, SBI, of course. Mr. Ghosh, just one simple question. Can the government of India afford this? The Finance Ministry, from its official Twitter handle, has said that the revenue loss is 13,000 crore rupees for the rest of this financial year. We've already hit about 96% of our deficit for this year. Can we really afford this from a purely economic point of view?
No, I think in terms of, this cutting the rate is basically some sort of a counter-cyclical fiscal policy, you can say it. Basically, so that will, the government is hoping that it will actually put more money into the hands of the consumer and can stimulate consumption at a time when growth is flagging a little bit. So from that point of view, I think this could be some sort of an counter-cyclical fiscal push which the government is making. And the second thing is that right now, it seems that the fiscal deficit of 3.2% looks a little bit difficult to achieve. So that's why the government is also taking the plunge of cutting the excise duty. And given the fact that oil prices are currently high, so around 55, 56, so there's an assumption that may be going on that if the oil prices doesn't decline significantly from these levels, then this cut actually might not be too much detrimental to the state of government finances.
Okay, but the question is, if oil prices do climb higher, what then?
If oil prices climbs higher, I think there is always the possibility of this revenue loss. So that assumption should also be built in. But at the end of the day, I think there was talk of some sort of a fiscal push. And I think this is the best way to work on that, because other sorts of push, which is trying to, stimulate demand in some sort of the other, may not work in to that extent. So I think this is the best option which the government has done under the current circumstances.
Stay on with us, Mr. Ghosh. We're also joined by Harshvardhan Dole. He is Vice President, Institutional Equities of IIFL. He's on the phone line as well. Mr. Harshvardhan, what is your view on this cut? Of course, some relief for consumers. Retail prices will go down from midnight tonight. But overall, what is the impact you see?
Well, from an earnings perspective, this, of course, is a neutral event. This does not, materially alter any earnings forecast by these companies. But, it's a sentiment booster from most of the stock prices. For simple reason, when the crude oil prices were going up, it was questioning what is government going to do and whether it will unroll the reforms that they themselves have rolled a couple of years back. So in a way, government is trying to answer that question that, we are very committed. We don't want the balance sheets of these companies to get strained again. And we are here to support them. And at the same time, we are here to ensure that the prices to consumers don't escalate beyond a particular level. So I would rather not read much into it. I would rather see that, this is a good support given by the government to ensure that sustainability of the reforms actually continue.
All right, Mr. Dole, thanks so much for speaking with us at BloombergQuint. Now, all eyes will be on the RBI tomorrow at its bi-monthly policy announcement. The Monetary Policy Committee, or the MPC, is faced with slowing growth on one hand, and on the other, inflation is starting to pick up pace. In this scenario, does the RBI have room to cut rates? Ira Dugal of BloombergQuint does this analysis.
The Monetary Policy Committee delivers its verdict on Wednesday, and as always, the headline question is, will they cut interest rates or not? The short answer to that is yes, they can, but they may not. But the long answer to that lies in the series of charts that are going to follow from here on. The first thing at the top of everybody's mind, of course, is the slowdown in growth that we have seen in recent quarters. Growth has been coming down for 5 consecutive quarters, but the 5.7% GDP growth number in the first quarter really hurt everybody. And that's led to a significant debate debate on what is slowing the economy and what can be done to revive it. The judgment call on that will be all important in making the decision of whether interest rates, lower interest rates, can actually aid a quicker recovery. The Reserve Bank of India is likely to bring down its GVA growth target for the current year from 7.3%, perhaps closer to 7% or below that, is what Bloomberg News poll has suggested. The problem is that it's not just about growth. This slowdown in growth is coming at a time when inflation has started to normalize. So if you remember, a few months back, inflation had slipped into the two-handle. Now it's moved back up closer to the RBI's target of 4%. And the expectation is that by the end of this fiscal, you'll have 3.5% to 4.5% kind of inflation. So actually, a pure inflation targeting central bank may not be comfortable cutting rates at a time when inflation is on the upswing. But remember, we are a flexible inflation targeting central bank, so we can prioritize growth in the short term if we feel that growth needs some amount of aid from a monetary policy. There is a third complicating factor, and that is the government's own finances. In the April to August period, the government has utilized 96% of its fiscal deficit target. It's the highest since the 90s based on data that we had compiled here at BloombergQuint. And on top of that, there is questions about a fiscal stimulus coming in. So the fiscal side is already expansionary. Can the RBI afford to take an even more expansive stance on monetary policy and then risk inflation picking up more than it is comfortable with? That is the judgment that the RBI will be making. Remember, though, that the RBI will be very careful before it puts in any sort of hawkishness into its tone, because bond markets have already signaled an upside in yields. 22 basis point rise in the 10-year benchmark bond yield between last policy and this policy is something that the RBI will take note of. They will also have to take note of the currency, which has weakened. Now, it's great for exports that the currency has started to normalize a little bit, but it could mean slightly higher imported inflation elements coming into the economy. So all of that will go into deciding whether one more rate cut is required. Just want to close off by reminding everybody that we have had 200 basis points in rate cuts since the peak of the cycle. You've come down from 8% repo rate to 6% repo rate. And if that hasn't done much good for the economy, the question also is another 25 basis points, what will it really do? The proponents for a rate cut are saying that it'll help keep sentiment alive at a time when things are looking a little bit sluggish. And those against it are saying, don't do away with all your firepower. Maybe wait until December or early next year when the growth scenario is a little bit clearer. And then, if required, do that one last rate cut.
Okay, Aditi Nair, senior economist at ICRA, joins in on the phone line. Aditi, thanks so much for speaking to us on BloombergQuint. Now, the signals are that the government and industry want a rate cut to revive growth. What are you seeing? Is there a rationale, you think, for a rate cut presently?
So in terms of the dynamics that inflation has really displayed over the last couple of months, certainly we've seen a very sharp and a very rapid uptick in inflation to 3.4% last month from the series low of 1.5% that we've seen in June. And this uptick is really in line with what the MPC had already foreseen in the last policy when they had cut rates. And they had maintained a neutral stance at that time. Also, looking forward, we expect that inflation is actually going to rise further over the next couple of months and cross 4% by about November or so. So keeping this trajectory in mind, we don't think that the MPC is actually going to go in for a rate cut tomorrow. And at the same time, we do think that they are going to cut the GVA growth forecast from 7.3%. So it's going to be a very interesting and a very finely balanced policy coming in from the RBI in terms of lowering of the growth forecast, but most likely repo rate, which is going to be maintained at 6% instead of a cut at this point.
Aditi, what are the other big numbers that you're looking out from Urjit Patel tomorrow? You mentioned that the GVA forecast, sort of being tweaked is something that you're looking out, but the other top numbers that you will be keeping an eye on and what signals the RBI is sending?
So, yeah, definitely we'll be looking at whether they change the trajectory for inflation or where they see Q4 inflation ending up. I don't think there'll be too much of a tweaking in the inflation outlook because a lot of the factors that they had outlined last time have actually moved in line with the expectation. So I don't really see them changing the inflation outlook significantly as compared to what they had released last time around. The big number that we are looking out for is how much they cut the GVA baseline growth expectation? And what are the comments from their side in terms of whether the recent slowdown in growth is more transitory or structural in nature? Also, what is the impact of GST that they're seeing on the growth slowdown? How soon do they expect it to reverse? What kind of prescription do they suggest for reviving investment growth? I think these would be some of the big ticket, behind, between the lines kind of things that we would be looking for. Certainly in terms of what you were saying earlier, a 25 basis points rate cut would give some breathing room to corporates, particularly those that are quite highly leveraged. But it isn't something that is likely to be able to jumpstart investment activity by itself. So
that was one point I wanted you to actually give your opinion on. So much focus and concentration on the RBI cutting rates, but in the current scenario, would say a 25 basis rate cut actually make any significant difference?
So not to investment activity, we don't think so, and that's why we don't think that would be a very compelling argument for the RBI to cut rates despite the up move in the inflation trajectory. Instead of a small dose of monetary easing at this point in time, perhaps what would be more helpful to the economy as a whole would really be a targeted kind of fiscal intervention, perhaps through extra budgetary resources so that the government's fiscal doesn't take a hit. Particularly for sectors where there could be a faster taking off of projects from the planning stage to actual execution. So we could look at, some kind of projects being announced in different transportation sectors, maybe affordable housing. These would be sectors where we could expect the core industries to get a boost, also employment to get a boost. And perhaps the funding could be done through instruments such as tax-free bonds so that Government of India's own fiscal deficit doesn't end up getting enlarged by this kind of borrowing. Also, specifically looking at the kind of concerns that exporters, for example, have been voicing over the last few months in terms of the working capital needs after GST, sorting through some of these procedural issues would also perhaps boost sentiment far more than a 25 basis points rate cut.
Right. Thank you so much for that, Aditi Nair there. Speaking about the possibility of RBI cutting rates tomorrow, which not too many are betting on at this point. But do remember, BloombergQuint will get you all the top coverage of what is happening in that credit policy tomorrow and also the best analysis. Now, India's manufacturing output expanded for the second consecutive month. The Nikkei India manufacturing PMI remained unchanged at 51.2 in September. A reading above 50 indicates an expansion. Remember, the manufacturing PMI had indicated a contraction in July, falling all the way to 47.9 as businesses grappled with the transition to the GST regime. Now, that's the good news. The bad news is that the level of the PMI index is lower than the long-run average above 54.
Staying with macroeconomic data, output of 8 core sector grew 4.9% in August compared to the 2.6% rise in July. This is the highest growth rate since April. The corresponding figure in August 2016 was 3.1%. Coal and electricity segments clocked double-digit growth, while fertilizer, cement and crude oil recorded negative growth. Healthy growth in key sectors will have positive implications on the Index of Industrial Production, or IIP, as it accounts for about 41% of the total factory output.
A new month, new start. Indian markets extended gains for the third day in a row as investors await RBI's monetary policy decision. Both the Sensex and Nifty eked out gains of around 0.7%. Tata Motors led the rally after it won a government contract for 10,000 electric cars. Neeraj Shah breaks down the day's market action in this report.
Well, it was an interesting day of trade, the second day of the new series, the first day of the month of October, and the third day of gains for the Indian equity markets. Broader markets too performed well, and it was volatile in a manner of speaking. So while if you look at the headline numbers, 0.75% of a gain for the Nifty and the Sensex about 2/3, it did bob between becoming extremely flat to doing very well, predominantly led by the Bank Nifty, which was very, very volatile. What did well? Well, Tata Motors, strong show, more so in the CV segment, and that stock did well. Off the highs of the day, but still did reasonably well, only to be overtaken by GAIL towards the last 1 hour of trade. So GAIL had a pretty strong day throughout on the back of the Nomura report, and in the end only went up higher. So selectively certain auto names, select oil and gas names led the charge on the index in today's session. Strong September sales, however, did not set the stage on fire for TVS or Ashok Leyland. Good numbers somehow the stocks giving off some of the gains that they've made in the last few days, especially Ashok Leyland, which ended very, very flat. New kid on the block, well, SBI Life, not really a kid, but yeah, the gains were but a whimper really. Hardly anything, just about a % move, and listed about 5% higher, but didn't quite live up to even that 5% gain, and ending the day extremely flat. A disappointing listing, you would have to say. No disappointments though for the metal space. I think across the board, Tata Sponge, JSPL, Hindustan Zinc, you had metal names, mid-sized metal names, which did extremely well for themselves in the session today. Not to be undone by cement, which is the other commodities pack which did very well. So Dalmia Bharat, India Cements, a clutch of other small cap cement names on extremely high volumes, by the way, did really well for themselves. And there were these usual set of winners. I picked up two. I spoke about Tata Sponge earlier, but Avanti Feeds had a very interesting day. Went up, trended higher, closed the day at the highest point of the day. This one could be an interesting mover in tomorrow's session as well. But all in all, market breadth, just about even Stevens, ending the day very, very flat, not in favor of either the advances or the declines. Global markets don't look too bad. It sets us up for an interesting policy day tomorrow.
Well, fix the banking system first. If you want to turn around the Indian economy, that's not the word coming from me. That's the word from Saurabh Mukherjee, CEO at Ambit Capital. In a conversation with BloombergQuint's Neeraj Shah and Pradeep Pandya earlier today, he adds that the credit quality challenge is weighing on all forms of lenders other than vehicle financiers.
How do we turn things around in India? I think the answers keep going back to the banking system. We have to find a way to repair the broken banking system. You cannot expect to build an economy, an underdeveloped economy like ours, $1,600 per capita income. We can't expect to build an economy like ours with a banking system where credit growth crawls along at 2, 3, 4% year after year. At the moment, the bond market is doing a good job of funding our car sales and our washing machine sales and our home loans. But the bond market is not meant to be the frontline funder of the economy. Last 12 months, the bond markets lent way more money than the banks have. So I think repairing the banking system would be a central issue.
What's your call on banking sector really? Because this, in spite of all these concerns, people have been finding several stories to bank on. What are you really doing?
Yeah, I think that the corporate life in India dictates that you find silver linings in the darkest of clouds. I think the banking system credit quality issues will worsen in the Q2 results. I don't have that much doubt that the NPA numbers, not just the large corporate NPA issues, which I think we're very familiar with, but I think small and mid corporates now, I think the NPA challenges are mounting there. The PSU banks have been on the firing line. I think the PSU banks will continue to get battered on credit quality again in small and mid corporate. The interesting question is, what about the private sector banks, the NBFCs and the HFCs? We saw in 1Q housing finance companies' credit quality deteriorate quite meaningfully. I reckon that the deterioration in credit quality in the housing finance companies continues. I don't think truck finance is in the greatest of shape. The data that we're getting on truckers is volumes, truck freight rates suggest truck finance will continue to weaken. Barring car finance, which I think is one big bright spot in India, thank God for that. Barring car finance, I think we've got credit quality challenges elsewhere.
And SBI Life Insurance made its stock market debut today at a premium of 5% on the National Stock Exchange at 735 rupees compared to the issue price of 700 rupees. It closed 1.9% up at 71330 rupees. SBI Life Insurance raised $1.3 billion in India's biggest initial public offering in 7 years.
We will keep offering all kinds of products to the consumer, which will include your traditional products, participating, pure protection. It will also include ULIPs, and it depends on what is being sought by the consumer at that point in time. Broadly, we do not expect a very major shift in our product mix as it exists today.
So ULIPs will continue to be?
It has a certain percentage, so roughly it will remain the same percentage. We have done an assessment based on the current levels of growth that we are seeing, and if we continue in this vein, then we feel that maybe 2 or 3 years down the line, we might need capital, provided the profitability mix also remains the same, but not before that. The growth that we are seeing, currently it's around 35 to 40% in top line growth. If we continue to have that kind of growth, And given the other experiences that we are having on persistency and mortality, and etc., we feel that we will need capital around 3 years down the line, not before that.
Now, auto companies seem to be in top gear this festive season, with all major players reporting robust sales data for the month of September. Yatin Mota of BloombergQuint breaks down the numbers for us in this report.
Starting with Maruti Suzuki, that four-wheeler giant has reported a 9% growth as far as the September sales are concerned. Of course, the compact segment, which includes the Baleno, Desire, and the new launches, has given a growth of almost 44% for the month of September. So good going as far as the new launches are concerned for Maruti. Also, Tata Motors surprised on the positive side, be it the commercial vehicle side or be it the passenger vehicle side. The sales were higher by nearly 19% for the month of September. TVS Motors also, the two-wheeler sales grew by nearly 23%. Bajaj Auto, which has been lagging behind its peers in terms of the overall growth rates, has seen some pick up finally, especially in the export market and in the three-wheeler segment. The total sales were a little over 4.28 lakh units, up nearly 14%. Also, we have the motorcycle sales for the auto major growing by nearly 11%. Of course, as I was mentioning, the three-wheeler sales saw good growth along with the export markets. Royal Enfield from the Aisha Motors stable had seen a growth of nearly 22% for the month of September. And also the commercial vehicle segment of Aisha Motors saw 26% growth. Remember, after GST, we had weakness in the overall commercial vehicle sales for most of the commercial vehicle players. But now, in the month of September, because of festivity, we have seen some good growth coming in. And similar was the case with Ashok Leyland, wherein a 28% growth was registered for the month of September.
Now, that's the wholesale picture. What's the reality in the showrooms? Is the festive cheer rubbing off? Krishanu Mukherjee from BloombergQuint, who spoke to dealers today, joins us with the details. Krishanu, tell me, is there a pickup in sales when it comes to showrooms? What's the deal at showrooms?
The ongoing festive season in the northern part of India has brought different fortunes for different companies, from two-wheeler manufacturers to four-wheeler manufacturers. The stories that are coming out are different. For four-wheeler manufacturers such as Maruti Suzuki, which has been extending its market share by the day, which is at over 50% now. Most of the cars are on waiting, but discounts happen to be higher than even December levels, is what dealers across the national capital have told us. When it goes to companies like Tata Motors, discounts are still prevailing and are 1% higher than discounts even found during the year ending, which is during December. When we come to two-wheeler manufacturers, the story is a little different, for especially companies that have a bearing on motorcycles, because sales of motorcycles somehow are lower than that of scooters, and hence, while discounts are higher and there are cash discounts being given, which by the way were not given last year, there are cash discounts that automakers like Bajaj Auto are offering, which were not offered last year, yet sales numbers somehow happen to be lower than last year on the retail level, is what dealers of Bajaj Auto and other two-wheeler makers with exposure to, particularly to motorcycles, have told us, that sales on the retail level are lower than last year. What FADA has told us is that the average dealer inventory level is 45 to 60 days, and that automakers are actually piling up inventory with dealers in order to meet the festive season demand, which for some is there, for some isn't. But what FADA has said, that this is hurting some dealers as they are required to take loans in order to pile up the inventory. So the company at the wholesale level is piling up inventory, showing wholesale figures. At the retail level, in the motorcycle segment, sales aren't that much. But in cars, there is a 10 to 12% growth is what dealers tell us at the retail level.
All right, now Nikunj Sanghi, President of the Automotive Skills Development Council and former President of the Federation of Automobile Dealers Association, or FADA, joins us on the show for more. Thank you so much for joining us, Mr. Sanghi, on BloombergQuint. Now, is the numbers that the auto companies are talking about, are those numbers being reflected at the dealer levels? We've seen top car companies reporting double-digit growth in this year, looking at good growth due to the festive season. Is that sentiment being echoed at the dealer level?
So I think what you need to understand is that, one, we are comparing a month last year, September, which had no festival, with this year, September, which had a festival. So I think some of the spike which has come in this September is because of the festival, which was not there last year. Two, I think we have had a subdued sales in the first half of the year. And if you look at that subdued sales, then there is obviously some cheer in the market in terms of a better retail pickup. But as of now, wholesale figures are definitely higher than the retail figures. And we are only hoping that because of a reasonably good monsoon in at least 70% of the country, we should get a good retail figure in the first 3 weeks of this month. So I think we'll need to keep our fingers crossed and hope for the best.
Okay, as my colleague Krishano has been reporting that we're seeing very deep discounts at this point from the dealers' end. Do you see this trend continuing? Do you see the discounts getting more attractive, especially during Diwali? Of course, the festive season has just started, but as they pick up. And what kind of a post-monsoon impact do you see?
So as of now, I definitely do not bring up any further, because schemes which are decided for a festival period normally are kept stable once the festival season kicks on. So I don't see a deeper discount happening, because as it is, the customer schemes are extremely attractive and retail numbers are important for almost every manufacturer. So post monsoon, like I told you, that some part of the country has seen really good monsoons, and you are seeing that impact. I think in most part of the country except the north. The north is slightly subdued as compared to the other 3 zones of the country.
Okay, when you compare the kind of sales you're seeing at the dealer level compared to last year, what is the big differentiation? What I'm basically trying to understand is, because we're in the middle of a narrative that the economy is facing its hurdles, is any of that impact being seen on consumption or in the auto sector as of now?
So I definitely see there is a pattern, and the number of footfalls, the number of inquiries is not as good as we thought it would be. And why we were hopeful was because the first 6 months have not been very good, and we were really looking forward to the festival to get a much better retail figure than we have been doing in the last 6 months. But the cheer is because the first 6 months have been so bad that any retail growth that we are seeing adds to the business sentiment of most dealerships. And we are all keeping our fingers crossed about clearing up our inventories. I think Maruti continues to have a lot of its models on the wait list. And so the inventory buildup in Maruti dealerships is not as much as the other brands.
Mr. Sanghi, just one last question. Are you seeing the GST pain sort of now, passing away? Do you think that that hurdle is pushed? And because, if you're keeping 45 to 60 days of inventory, is that sustainability there at the dealer level?
That sustainability is definitely not there, and I don't think the GST pains have gone away. We continue to battle with the way GST is getting implemented. I think we have had problems filing our returns, and there is some lack of clarity and in terms of policy. So I think used cars have been very terribly hit by GST, and that is impacting some part of our retail, because a lot of new retail now happens as a trade-in of old vehicles. And with the kind of law which has been implemented for used cars, where used cars are getting taxed at the same rate as the new cars, I guess there is some dampening on the used car market, and therefore ultimately it's going to impact even new car sales.
Right, Mr. Sanghi, also, considering we've seen, especially with Maruti, the amount of waiting really on some of those cars, and a lot of people tuned in want to know, especially the Vitara, Brezza and Baleno, do you think that, automakers will be able to cope with that sort of demand this festive season, especially on these popular segments?
So I don't think Maruti will definitely have a supply constraint, because their booking lists are actually overflowing, and it is going to somewhere impact their total retails. Had they better capacity capability now, they would have seen better results.
All right, Mr. Sanghi, thanks so much for speaking with us on BloombergQuint. Now, work on Mumbai's longest underground metro line, the Metro Phase 3, has already begun. The line has been surrounded by controversies due to objections to felling trees and a stay by the Bombay High Court around construction in heritage areas. Given all these snags, the project is expected to be completed by 2021, says the MMRC. Purva Chitnis of BloombergQuint caught up with the managing director of the MMRC, Ashwini Bhire, and here's what he had to say.
Final figure of how many trees would be cut and how many would be transplanted?
That is very much there for stations. It is roughly 2,800 trees are getting affected, but out of that we are actually cutting only 1,000 trees. Okay. The rest are getting transplanted, and whatever trees we are cutting, 3 trees in lieu of 1 tree cut, we are basically planting as compensatory plantation.
When can we see this metro operational?
Right now, as per our schedule, we want to start the first phase, that is from car depot to BKC by May 2021.
Okay.
And the remaining corridor up to Cuff Parade by December 2021. This project, once it is commissioned, it will carry almost 17 lakh passengers per day.
Yes.
And it has the capacity to take off 6.5 lakh vehicle trips per day from the road.
Yeah,
so
that was what I was going to come to.
so that itself will basically save the consumption of fuel to the tune of 3.5 lakh liters per day.
Now, the government has approved 5 foreign direct investment proposals in single brand retail. These approvals include those of Oppo Mobiles India, Louis Vuitton, Chumbak Design, Daniel Wellington AB, and Acto Serba Active Wholesale that runs the Zivame brand. FDI into India grew 9% to $43.47 billion in 2016-17.
Security forces foiled an attempt by Jaish-e-Mohammed today to storm a BSF camp near Srinagar airport. While all 3 militants involved in the attack were killed, the BSF lost an assistant sub-inspector and 4 security personnel were also injured in this attack. In a joint press conference in Srinagar, security forces confirmed that the attack was carried out by Jaish-e-Mohammed, or the JEM. Security forces have also identified 7 militants who need to be eliminated soon.
Prime Minister Modi today took a dig at the Congress government in Himachal Pradesh, saying that the state government is running on bail. Kicking off BJP's election campaign in Himachal, Modi accused Congress leadership for failing to take action against State Chief Minister Veerbhadra Singh and reasoned that the party leadership is also on bail. Himachal Pradesh Chief Minister Veerbhadra Singh is facing charges in the money laundering and disproportionate assets case currently.
हिमाचल में जमानती सरकार चल रही है। ये जमानती सरकार है तो मुझे कांग्रेस के लोग मिलने आए एक बार, तो ऐसे ही मेरी बात चली। मैंने कहा यार, ये आपके मुख्यमंत्री, उनका पूरा परिवार भ्रष्टाचार के मसले में जमानत पे बाहर है, आप सीएम बदलते क्यों नहीं है? बदलते क्यों नहीं है? बोले कैसे बदले? हमारी पूरी पार्टी जमानती है।
Moving on to the Las Vegas shooting, which killed 58 people and wounded over 500. While the gunman has been identified as 64-year-old Stephen Paddock, there is no clarity yet on the reason for the attack. Paddock was found dead in his hotel room of a suspected suicide with ammunition. The Islamic State claimed yesterday that Paddock was one of their new recruits, but the FBI ruled out that the shooter is connected to ISIS. President Trump has condemned the attack, saying the shooting was an act of pure evil. He will be visiting Las Vegas' survivors tomorrow. Emma Chandra from Bloomberg News, New York, brings us a comprehensive report on everything that's happened.
It's being called the worst mass shooting in U.S. modern history. The death toll now stands at 59. 527 people were injured when the shooter opened fire on a number of people, 22,000 people in fact, attending an outdoor music concert in Las Vegas. We're learning today that the gunman had a huge arsenal of weapons in his hotel room. He was staying at the Mandalay Bay Hotel on the Las Vegas Strip. Police are telling us that Stephen Paddock's body was found found with 23 guns. They also found 2 gun stocks that would allow the shooter to fully replicate automatic fire. At Paddock's home, they found a further 19 firearms, explosives and thousands of rounds of ammunition. Now, officers believe that Paddock had been staying in the hotel on the Las Vegas Strip since September the 28th, preparing for this attack, but they're still trying to establish his motive. Police are not commenting in any way on what they believe that motive to be. They found no link, though, to international terrorism. That's despite the fact that Islamic State has claimed responsibility for it. Police here in the US are saying they don't believe that claim of responsibility. They also say Paddock had no criminal record and was not known to police. What we do know about him is that he's a former accountant who lived in a retirement village in Mesquite, a small town northeast of Las Vegas. He did used to travel to Las Vegas fairly frequently, and he was a known gambler there. Now, President Trump has also been speaking about this today. He called the shooter a very sick individual. He also made some comments about gun control, saying he's going to be talking about gun laws as time goes by. Gun control is a very contentious issue here in the US, with Congress having been unable to change any laws regarding it after previous mass shootings. The president heads to Las Vegas tomorrow. He'll be meeting with first responders as well as some of the families of victims.
Well, that was Emma Chandra of Bloomberg News. But you know, Tamanna, there's a lot of comments coming in, and thanks so much, guys, for tuning in on Facebook, Twitter, Bloomberg, BloombergQuint.com. Well, essentially, Tamanna, Starlight Star says on Twitter, and that's a mention. Let me ask this question. Do you think Trump is doing a great job?
Well, I don't know who can answer that, and a lot of people have very varied views on that. But some more feedback which is coming through the show from Praveen Madhupati, who's asking and saying actually that it's better to cut the interest rates. This was in response to the story we did on the RBI credit policy announcement tomorrow. And he also says decrease the GST slab rates immediately. Thanks, Praveen, so much for writing in. Now, a multi-trillion-dollar opportunity in the Indian equities led by financial and consumer stocks. That's what Morgan Stanley expects over the next 10 years.
The revolution is happening on the asset side in India. It's already underway, with or without digitization, because there's a big shift happening there. It's coming out of cumulative change in regulations. The fact that, you know, if you go back to the 90s, and this will take a slightly longer response from me, Indian stock market was faced with back-to-back scandals. You go all the way back to 1992, and then we had one every year. We had a blow-up every couple of years. It took a while for SEBI to get itself settled in. It was formed only in '94. It took 5-7 years for them to actually understand the Indian market, to get rid of the archaic systems that were prevalent, and to make the whole thing electronic. It went electronic only in 2002. I remember that very vividly because we had a vault in our old office which we converted into a gym. Because we didn't know what to do with the safety vault because there was no paper to handle. So that's only 15 years ago. It isn't a long time ago that we actually had all these regulations come in. It takes time, but the cumulative effect of this regulation change, as well as a lot of money and time spent on educating investors, is that finally people in India have got the joke, which is if you want to invest or save for the long run, you have to save in a financial asset. Even better, save it in equities. So we're seeing this tumultuous shift on the household balance sheet. Now think about the household balance sheet in India. It's got $1.7 trillion of gold and $350 billion of equities. I don't think there's any place on the planet where households own 4 times more gold than the whole stock. I mean, this country has got such ownership of gold, which yields nothing to you. It just sits in it actually costs a lot of money to even store it, and it just sits in your vault, okay, waiting for price to appreciate. Compare that to a financial asset, which is usually a yielding asset, including equities, and which grows with cash flows, underlying cash flows of enterprises. Very different. So that revolution is only happening now. People, look at last month or the month before last, since we're now in October, the domestic mutual fund flow of $4 billion and say, oh my God, this is a bubble. But the point that we're making is just about starting now. Because we're just making that shift today. And that is, I think, the big deal here, is that digitization is going to give a further push to this shift on the household balance sheet. So on the liability side, greater lending, but on the asset side, more financial saving. This is also good news for capital productivity in the country, because we used to save in non-productive assets, i.e. gold. Now we are saving into financial assets which can be converted into something that can actually yield output, something that will yield jobs, which then fuels income, fuels further saving, consumption. It's a virtuous cycle. We're just starting that.
So your estimation is our savings rate will be higher than that of the US, let's say 10 years down when you...
It's already higher. It's already higher. But Menka, you look at the... so also the investment rate will go up.
Right.
So if I were to just, refine your question, will we run a current account deficit? I think mostly yes. Unlike China, which ran a current account surplus, which saw such a big rise in saving, they couldn't actually keep investment rate at that level. I think the likelihood is that India's investment rate will remain higher than saving rate, which is we'll run a mild current account deficit.
Well, of course, you can catch that full conversation with, Rhythm and Saurabh on BloombergQuint.com.
Yeah, that's all the time we have on Primetime this evening, but stay tuned.